Hey folks, Joe here from Charting Star. It's Sunday the 5th of Feb and we are going to have a look at the US markets, but we are going to start off with the British FTSE 100. I was showing this chart here like 2 weeks ago and I was showing you that descending broadening wedge which got triggered right here. It broke out, it pulled back, and now it's on its breakout. The FTSE was touching its all-time highs on Friday afternoon, and these targets here, that statistical target at 82.81 remains valid, and at 84.22 that would be the 100% move of that formation, and that fits actually quite well into that overall count. Still, the 100% target of that last wave, which is a duplication of that first wave up, we got that at 84.38. So the FTSE seems to be on its way up, and while having a look here at the bottom at these cycle brackets, we are almost halfway through. The halfway point for that cycle would be at the end of Feb, so the FTSE could continue a journey into Feb, early March before turning around, and then a cycle low is suggested at the end of June. And this is the French CAC40, and it looks very similar to the FTSE. We have a very nice 1, 2, 3, 4, and the minimum targets of that last wave, even it didn't overshoot that all-time high here out of January last year, is already hit here at the 71.96. I would prefer actually to run a bit higher into that 74.03 or 76.22 area, and there is a very similar cycle going on here. We are already halfway through, so the CAC could turn around at any time, and a cycle low is suggested here in mid-May. Yes, and before we continue with the US charts, I would like to show you some indicators I use, which could be used to identify the tops and the bottoms. This is a so-called double MTW. It gives you the percentage of stocks above the 20-day moving average at the New York Stock Exchange. And you look for extreme readings. For the tops, you look for extreme readings above 80, or you look for divergences. So to give you an example, it marked the top right here in April, it marked the top in June, it marked the top in August. And now we're actually seeing divergences which mark the top here, or that negative divergence marked the top in December, and we are getting another negative divergence. We are hitting higher highs at the New York Stock Exchange and the S&P 500, but all stocks are not actually participating in that. And another very nice oscillator is the so-called NIMO, which gives you a ratio between the advancing and declining stocks at the New York Stock Exchange. So it's for the broader market as well, and you look for divergences here too. So we had that very large divergence into mid-December here, and we are having the same thing right now. And you also can look at the NIMO for the S&P 500. Is that the right one? No. That's the one. So it's the Maclaurin oscillator for the S&P 500, and you have the same divergences taking place here as well. The S&P marked a higher high last week, Thursday I think it was, and the Maclaurin oscillator is not coming over these highs here. So there's a very nice negative divergence as well in these oscillators. And we're going to stay with the S&P 500. I'm going to show you the weekly in a little bit. First of all, we have very mixed signals there. Last week we had a so-called golden cross on the daily, which means the 50 daily moving average is crossing through the 200 from below, and that is actually a bullish sign, and it marked a in the past actually is the start of a few rallies coming up. But I want to go back in time, and I was showing you that weekly, and I said last week I wouldn't pay too much attention on these trend lines because we broke through it and we stayed above that trend line now for quite a bit. But I said in bear markets, these trend lines, they like to be broken all the time, and usually there are new trends building up before that whole ship is turning around. And this one here is that trend line we had in 2000. First of all, we had that death cross here. The death cross I was also mentioning last week. This happens when the 50 weekly moving average is going or crossing the 100 weekly moving average. And that happened right here in April 2001, and we had the top exactly 1 year before that. And what I'm trying to say is we had that crossing as well after like 9 or 10 months within that bear market, and exactly the same happened in 2000. And here's that trend I would like to show you. As you can see, we broke that trend, and we were like playing with that for like that time from May into August for quite a bit before we were selling off again. Then we came up again, we were breaking that trend again, we're staying above it for quite a bit, but then we are actually failing at that 50 weekly moving average before turning around again. And we are moving on a little bit in time into the financial crisis in 2007. Same thing here, we had that death cross on the weekly after like 9 months. This one here was the top was in October, and the golden cross happened in summer the year after. So timing wise, it's like we are in the same situation when that crossing occurred, and here's that trend which got broken, and we turned around, we tried to retest that trend, and then we completely sold off into the next year. And we keep moving on into the present, and here similar situation. We have that death cross I was showing you last week already. Actually, I was showing you that on Twitter like a month ago. And here's that trend which got tested, we got rejection here, and now it seems like we broke above it. And actually there are other guys who see like a cup and handle here. Yes, and that's possible. We could even run higher into that 4400 area. To be honest, that would be a statistical move of that cup and handle pattern. It's usually you measure the 100% move is you measure that inner height here from that top to the bottom. But if you want to have the minimum target, which is a so-called statistical target, you get like 62%. And that would be around that 4400 area. And that's also a possibility to run up here first before turning around again. And we are moving into the daily chart now. Yeah, so here's the daily, and let me just show you that golden cross I was talking about. That happens, as mentioned, when the 50 comes from below and crosses a 200 daily moving average. And I zoom in here a bit, you see it a bit better, and that actually took place on Thursday. And the only thing which doesn't fit on this daily chart is my cycle. The cycle was suggested on the 2nd, and I was going actually for a temporary low, and the reason might be that the cycle is started to shift again. Because as you can see here in my projected path, I was going for a temporary low for another rally into mid-Feb before they sell off. Now we got that kind of breakout out of that symmetrical triangle. And the thing is about that triangle is we could rally straight into the statistical target at 45.15. What I don't like about it that we are already staying 1, 2, 3, 4, 5, 6, 7 days above that trend line, and that is actually a clear breakout. That is actually a follow-through day, and that little tiny pullback we had on Friday, it seems like that this is not turning out to be a head faker from the current standpoint, just concerning the daily. There might be a stronger sell-off into Monday, Tuesday to retest that trend line before coming up here. We could even break down straight away. So the daily is not really giving us, or it's giving me not really a signal. Like a lot of people seeing that golden cross, well, that might work out, that we come down and that we push actually up. But once we have a look on our 4-hour time frame, and this one here is based on the future markets, but the prices you see here are actually, there's no contract, this is actually based on the cash. But these levels here, they run all the time, and you have that really nice ending diagonal here, also called like a Wolver Wave wedge pattern. And I was giving you that projected pass here on last Tuesday, and that worked out quite well. We hit that area here a bit too early in my point of view, and we could even come up here on Monday or onto Tuesday again. Because we are still, in my understanding, in that rising phase of that cycle, and the cycle suggests a low into the 13th of Feb. I put some retracement levels here. That's from that bottom we made in December. So that is a nice pullback area here between 40.30 and 39.28 if that top is in. Yeah, and I would like to continue with the Nasdaq. This is my weekly, and a couple of months back I was mentioning that 30-week moving average, which plays quite an important role at Nasdaq in this entire bear market. In March and April last year, that was actually major resistance, and Nasdaq got rejected there. The same thing happened in August. We tried to break above, but then we got rejected again, and we gapped right below. By the way, here's a weekly gap still open at 13,242, which is a quite important mark, because this also marks these bottoms we had, and these were the first major bottoms we had in this bear market in Feb and March last year. And then again we had between November and December, like we were playing around there for like an entire month to get above that 30-day moving average, 30-week moving average. Got rejected again, and now it seems like Nasdaq just took a deep breath to break through that moving average. And we didn't even get that breakthrough, we got a follow-through week as well. And now Nasdaq is hanging at that, I call it a double fib retracement level, which is between 12,850 and 12,950. These are both 38.2 retracement. The one is measured from the all-time high to that bottom we made in October. And the other one is coming from that March low we had in 2020 all the way up to the all-time high. It's the other way around. And that makes it here a double fib resistance zone, which is usually quite strong resistance. And we are already in week 16 of that primary cycle, which started in October. It made a half primary cycle top in week 9, and we came down into week 11, and now we are rallying since then. The Dow Jones, by the way, topped out here in December and couldn't get above these highs, by the way, but the Nasdaq and the S&P did, which makes it to be another negative divergence, by the way. So the Dow Jones is in a so-called left-hand translation, and the Nasdaq and the S&P are not there. They turned into a right-hand translation, which is usually a bullish signal as well. And once you have a look at the cycle brackets down here, this one here was suggesting a low in mid January. We got that 2 weeks early at the end of December, and now we are in that rising phase of that half cycle. And now the big question is, are we going to have we topped out last week already on Thursday, or are we going to continue rallying into week 17, 18, 20? This is quite late. These cycles could extend into week 27, so that might be another couple of weeks before we top out. And this blue cycle here, in combination with that half cycle, suggests a bottom sometime at the beginning of April. So yeah, we have to watch that carefully. And my daily chart here also a few other cycle brackets you see, and they worked out quite well. We marked that bottom here, we marked that bottom here, we marked this bottom here. That was just a little tiny pullback. By the way, that could happen here again, that we are pulling back just a little bit before there's another large move, and that was that large move we had in August. And that could here happen again, because that cycle low suggested around the 9th of Feb that we just have like another 2-3 days decline before there's another larger move into that next rising phase of that cycle here. And this one here suggests a low at the end of March then. That is also a possibility, and give me a sec. This was my tweet from the 3rd of Feb. I said these extreme readings don't mean that the top is in. This occurs actually quite often in a squeeze, especially when everyone thinks that must be it. Then it squeezes even further for a couple of days, so no one is shorting the actual top. We reached these extreme greed readings at the CNN Fear and Greed Index, and that's what I meant. Let me jump back into that chart. We had a very similar reading right here, where no one really can imagine we could rally even more. We just did a tiny pullback for like 3 days, and then we moved back into these extremes, and especially the US markets. One, they are all in these boiling indicators, and no one thinks this thing can continue any further. They do that actually, and that happens so often in these rallies, in these squeezes. And I mean, we talk about that tiny decline was like a 5% decline, and then that move up was another almost 15%. And just let's see, we retrace here a little bit further. We could easily run into that 13,602 area at Nasdaq. Another thing here I put in here is that shape of a W. First of all, that green zone here, which is like a triple bottom. We have like the low here at 10,440. Then we had like a double bottom here on the daily basis in that 10,670 area. And we reconfirmed that twice at the end of December and at the beginning of January. And so that green zone is like a major support at Nasdaq. And it was also like, well, we reconfirmed that bottom now like 5 times. And it's basically where the 61.8 retracement at 10,589 is. That it's a 61.8 retracement from the lows we made in March 2020 all the way up to the all-time high. So we had like a 61.8 correction, which was, yeah, very, very clean. And now we have that W-shaped bottom, and on the weekly clear breakout. And yeah, the only thing which doesn't really fit that we are quite late in these cycles, but as I said, we could extend those even more. And yeah, that's about the Nasdaq. I got another 4-hour time frame for you, and I marked, well, this could be these, you see these cycle brackets down here. This bottom here, or this low, could mark that cycle bottom, which doesn't mean we could run here to retest probably that December high at 12,209, which could also fit into that cycle low here if we make it within Tuesday morning latest. Yeah, keep that in mind. I gave you a little orientation here with this channel and these Fibo extensions of that channel. We hit the 61.8, and we might pull back here to reconfirm the lower boundary of that channel before running up again, or we dive straight through. But yeah, that's about the 4-hour time frame, and this is the VXN, the volatility of the Nasdaq, and I was giving you that very nice Wilbur wave falling wedge here. And on Thursday we had quite an interesting day. After that earning release we had we had like a very impulsive rally with these Meta earnings on Wednesday. So Thursday after opening they went straight up and started rallying, and I also was twittering that to keep an eye on that volatility, because that VXN especially went through the roof, and they pulled back a little bit into closing, and it kept being on these levels on Friday. And we were rallying on Friday again, and then on like half session through we started to sell off. However, I would like to see another pull back with a lower low before volatility takes off. That would mean that we are running into another rally at Nasdaq to drop here a bit further. Yeah, we just have to wait. I think if we keep selling into Monday, Tuesday, what happens on Tuesday, Wednesday? That might be the dates for a potential turnaround, or even stronger selling into the end of next week. The Dow Jones, my weekly, and as mentioned before while we talked about Nasdaq, this is a week of mid-December where we topped out at 34,712. And the Dow Jones got now 7 weeks and it didn't really get close where these highs were. And we got like an indecisive doji week last week as well. We had week 16. And while having a look at these blue subcycles, they suggest a low starting from the 6th of March. We are looking for probably just a temporary bottom before another rally starts at the Dow Jones, because I look for a major sell-off into May. The same what we have at DAX, and what I actually showed at the beginning of the video at the FTSE and CAC, that actually all matches up into that time frame. We have still that positive weekly RSI divergence. Keep an eye once we sell off if we bounce from there again. And the daily, oh no, this is S&P. The daily got a symmetrical triangle as well. I was showing you that already 2 weeks ago, and you see the entire week was like a doji, and you can see what happens here. We triggered that triangle, and since then from Monday on we kept moving at that upper trend line where we try to break through, but all these attempts, they seem to be fake out so far, which are very, very typical for these symmetrical triangles. And there might be a further pullback before we could hit these targets, or even that measured move to the downside. In my last video I was mentioning that symmetrical triangle, which looks like the smaller version of that move, and now we ended up in a bigger triangle, and that was actually the topping of that May-June time we had last year. So yeah, keep that in mind. These triangles, they could be 50-50 pattern, so they could fire up or even down. And here is that triangle again on the daily. It's zoomed in a bit more, and we had a so-called inside candle on Thursday last week, and we talked about those a lot at DAX, because DAX had a lot of them lately. But now what happened on Friday, because we actually undershoot the low from Thursday and we also got over that high from Thursday, we have a so-called pop gun. And these pop gun trigger levels are for the upside 34,183 and for the downside 33,793. So when they pop, or when they try to break through these levels, they usually like to duplicate that whole day to the up or downside, which would mean where we could make a move to the downside into that 33,400 area, or if we break up to that 34,570 area. And last but not least, I would like to show you that very reliable indicator for major reversals in the past, that Dow theory between the industrials and the transportations, and that in negative divergence became even more intense last week, because transportations, they were participating in that rally like Nasdaq and the S&P. They made higher highs into Thursday. The Dow Jones failed in making higher highs, and that divergence became even stronger. And as I said in the past, it was a very reliable indicator that we are very close to a reversal signal in the markets. Yeah, that's it. I hope you enjoyed this one. As I mentioned in my video before about DAX on Friday, I'll do another few updates tomorrow on Monday, but then I will be off for the rest of February. So I wish you all the best in that time, and I wish you a nice remaining Sunday evening. Yeah, subscribe me and hit that thumb up button, and I see you tomorrow. And if we miss each other, I'll see you back in March. Thanks.